do at Credit Suite is we help customers get business credit for their business and also get financing for their business. So if we can ever help you there, if you're ever interested in getting financing for your business, we deal with all these financing vehicles that I'm going to show you and more. Feel free to check us out. CreditSuiteLoans.com is probably the site that you want to go to, CreditSuiteLoans.com. I'm not going to be doing any kind of pitch today or selling you on anything. This is just going to be probably 40, 45 minutes worth of straight content and information. But again, if you want to learn more about what we do or get pre-approved for any loan, feel free to visit us, CreditSuiteLoans.com. So credit lines, when we talk about credit lines, these are, again, the most commonly requested loan program in the business world. Credit lines are popular because you only make payments on the amount of money you use on the credit line, not the entire amount. So this especially works well, for startups, because when you're getting started, you don't want to get a loan for $50,000 and only initially use $5,000 of the $50,000 and making payments on the whole $50,000. So what's nice about a credit line is that you're only really making payments on what you're actually using. If you put 10 grand on the credit line, that's all that you're paying regarding the payment. And as you pay the line down, you can reuse it. So it really gives you access to ongoing working capital. It's not like when that $50,000 loan expires, you need to go apply again. With credit lines, you don't. If you put 5 grand on it, you pay the 5 grand down, you've got that 5 grand to reuse. So again, these are some of the reasons that these are the most popular type of loan vehicle or loan product that's really out there today. So even though they're popular, true credit lines are rare and they're very hard to find. So if you've really been out there looking for a credit line, you probably already know this, that they're pretty tough to actually find a real legitimate credit line. And that's one of the reasons we're going to talk about credit cards today too, because often you'll see credit cards advertised as credit lines when they're not. And I want you to be able to differentiate between these. I want you to know the differences between them and how each works so you can recognize them when you see them. So many are also very tough to qualify for. Okay, most of these credit lines that you're going to find require good credit. They require good time in business and good financials. And the reason for that is because you can't even get approved for a lot of high limit credit lines unless you've got 2 years of tax returns, which means you'd have to be in business at least 3 years and your financials would have to be good. Some of them are even based on financials, as you'll find out. Now, again, if you've got credit issues, if you're just starting, don't worry. There's a lot of different options that we're going to dive into today, even ones that are stated income without financials. But there are other credit cards and lines that few people even know about that are available for startups, bad credit, even if you have no financials. And those will be some of the things that we're going to jump into today. Today, we're going to be diving into all of these so you'll know all of your options out there, whether they be credit card, whether they be credit lines. You're going to know what's really out there that maybe you can fit into now. You're even going to know what you can grow into in due time. So in a lot of cases, when you see credit lines offered, such as the ones with 0%, these are truly credit cards, not lines. We're actually helping a pretty big group with the marketing campaign they're doing, and they do a lot of deals. They do 16 deals a day that are unsecured credit cards, but they advertise them as credit lines. So if you go to the website, it clearly says 0% credit line. They really end up being credit cards. As a matter of fact, most ads that I see on social media, pay-per-click, these aren't really credit lines. They're credit cards. Okay, so again, this is really one of the reasons we want to dive into this day to decode the difference between them. So what's the true difference then? I mean, before we start talking about credit cards and credit lines, what really is the difference? And I think this is an interesting question because most people I talk to just don't know. I'll ask them, for example, you want a credit line or credit card? Well, it's got to be a credit line. Well, what's the difference? Well, I don't know. Well, then why are you so insistent on a credit line if you don't know the difference? This is just something entrepreneurs don't often know. And the real answer is there's not much of a difference. I mean, for the most part, these two types of funding vehicles are very, very similar, except for a few different things. So credit cards, for example, usually offer these 0% rates for up to 2 years. Very helpful for startups. Because as a startup, you want to not only pay only on what you borrow, but you also want to have the lowest payment you can have. Well, the only 0% interest I've seen anywhere ever in the business world has to do with these business credit cards that offer these 0%. Now, don't get me wrong. Okay, I see common examples of $50,000 credit cards and higher limits. Usually not higher. Usually I see 50,000 is probably one of the ceilings of these type of cards that I see at 0%. So really good opportunity to get the money you need at a really low rate. Okay, but you're not going to find that with credit lines. Credit lines don't offer 0% rates. So I guess I should go back, because if you're seeing this offered, it's more than likely a credit card, not a credit line. Credit lines, you don't really see these 0% interest rates. I'm not saying it's impossible, because nothing's impossible, right? But I can't tell you I've ever seen a credit line in the business world that's 0%. It's a true credit line, not a card. Okay, but credit lines allow you to take out cash at much cheaper rates than cards. These really are two of the biggest differences that I've seen, is that with a credit line, you can take cash advances. You can take cash out, and you don't have to pay like a super high premium to do so. Credit cards, you do. And this is one of the notable differences, meaning you could use a credit card or credit line pretty much at the same places, but The problem, well, depending on if you have a debit card for the credit line, but the credit card or the credit line will not charge you extra interest typically, or very high interest, to take a cash advance. Credit cards typically do. So your limit or your rate might be 0% intro rate. The rate on the card might be 5%, but they might charge you 15 or 20% on a cash advance. So two big differences. Credit cards, you can get 0% rates for as much as 2 years, which is awesome. Can't do that with credit lines. But credit lines, you could borrow and take cash against them much easier than credit cards at a much cheaper rate. So those are really the main two differences that will affect you between credit cards and credit lines. Okay, there's not a lot of them beyond that. Okay, Investopedia even says that lines of credit are potentially useful hybrids of credit cards, showing how similar they really are. As a matter of fact, if you do any research on this topic, whether it be Investopedia or anybody else, you're going to find something pretty similar, that most people out there are telling you that a credit line and a credit card, one is just a version of the other. These are really hybrids. They're basically the same thing beyond very minor differences. What kind of differences? I just told you the major ones you want to know. Benefit of credit cards, 0%. Won't really get that on credit lines. Credit lines, you could borrow cash. You can get cash advances at a cheaper rate than credit cards. So really, there's two of the main differences that you're going to want to know. Now, both cards and lines are revolving credit. Credit lines are harder to qualify for, as card approvals are typically very fast. I mean, in a lot of cases, you can go to their website and get approved with a credit card immediately. We even see $50,000 instant approvals if you're doing it the right way on credit cards. So very fast to get this, even with high limits. Credit lines, no way. You've got to go through an in-depth underwriting process for every credit line I've seen to be able to get approved. Very big difference. I mean, between getting approved immediately and getting your money in 10 days or getting your card in 10 days versus going through an underwriting process that could take 2 months to get your money is a big difference between the two. Okay, lines usually offer lower rates. According to the bank card rates average about 13%. Let me say this again. Okay, credit lines usually give you lower rates than credit cards. So if you're looking at bank rate, and what they say is that your average is about 13% typical interest on an actual credit card, while lines of credit give you 4%. So credit cards give you good intro rates, the better than credit lines. But when it comes to long-term money, credit lines tend to be a little bit better on rate than what you're going to find on credit cards. So don't get me wrong, we see business credit cards at 5, 6, 7%. I'm just giving you an idea of what bank rate actually sees the average as. So without a debit card, credit lines aren't as easy to access as credit cards because cards are used everywhere. So we understand this. So just because you have a credit line doesn't mean they give you a debit or credit card with it. Some of those only come with checks, and it's harder to pay with check than it is credit or debit card in today's society. So sometimes credit cards are just easier to use than credit lines. It's accepted at more places. But again, whether that's accurate or not depends on if they're giving you a debit card with a credit line. A lot of them do nowadays. So now that we've talked a little bit about the difference between credit cards and credit lines, let me dive in and give you the options of both. I'm going to tell you what's out there in this world really for businesses with credit cards and high limit credit lines, so you can see exactly what differs between the qualifications and money you can actually get. So most banks offer unsecured business credit cards. Okay, most of them do report to the consumer reporting agencies. So even though they tell you it's a business card, it still reports to your Equifax, Experian, and TransUnion consumer bureaus. Okay, they all require a personal guarantee from you. So if you're going into a bank or you're going somewhere else to get a business credit card online, they usually require, well, not usually, all these type of cards require a personal guarantee. You can get approved usually for 1 card max, or maybe 2 max, because they stop approving you if you have 2 inquiries or more on your report. Okay, now I've had this happen to me. I have good credit. Okay, don't get me wrong. I haven't always had good credit. I've had problems as an entrepreneur. A lot of other people have too. But recovering from that, I have good credit, and I've went to apply for a business card and got denied because of inquiries. So what happens with these is some of these accounts, as you're about to learn, do not report to consumer credit. They report to the business bureaus. So these card issuers never really know how much credit you have because they're aware that some credit could be on your business bureaus they don't know about. So what happens is if they see 2 inquiries or more in the last 6 months, then they usually won't approve you for a business card. So this is why you can usually only get about 1 credit card if you go to your bank. And it's not like you can go to Chase and get a credit card, go to Bank of America, go to Regions and get them all. You're only usually going to get 1 or 2 max before they get cut off. That's the reason why, because they're not lenient on inquiries. 2 inquiries can disqualify you for these type of accounts. So let's look at some business credit line and card options. Okay, first of all, when we talk about business credit cards, most credit card companies offer business credit cards, including Capital One, Chase, and American Express. Okay, and I list those 3 because they're the most popular. Like if you look out there at the best companies that offer business credit cards, those are the three that you'll often find. Now, these have rates similar to consumer rates, and limits are also similar than what you're going to find on consumer credit cards. Again, some report to the consumer reporting agency, some report to the business bureaus. Approval requirements are similar to consumer credit card accounts. So all we're talking about here is that you go online to creditcards.com, you type in business credit card, they pull up a list of options. That's what I'm telling you about. These are just normal business credit cards offered by most card issuers. Okay, now there's another kind of financing beyond your normal card that's called unsecured business financing. And this is very important because this program, I know 6 lenders in the country that offer this program. It's so rare that you'll usually not find it or bump into it unintentionally. You have to be looking for it, which is why this is important, because it's the most popular product within this space. So typically when you apply for a credit card, what happens again is you put an inquiry on the credit report. When other lenders see this, they're not going to approve you for more credit because, again, as I said, they don't know how much new credit you've obtained because they're seeing recent inquiries. So they'll only approve you if you have less than 2 inquiries on your report within the last 6 months or more, or you'll get declined. This is the standard in the business world when you're applying for business cards. But with this program, with unsecured business financing, you're working with a lender who specializes in securing credit cards. So this is what they do. They get business credit cards for their customers. Now, this is very rare, as I said, very little known about program. Okay, it's really one of our most popular programs we see because when people learn about it, they're like, oh my gosh, I'm in, that's perfect. It makes so much sense, especially for startups. But again, it's rare, so you need to know how this works because it's not something you're going to find unless you're looking for it. So what happens with this program is you're going to get about 3 to 5 times the approvals that you're going to get on your own. That's how it works. So for example, you might only go out and get 1 credit card, but with this program, they're able to get you 3, 4, 5 of these type of accounts. Now, this is because they know the sources to apply for, the order to apply, and can time their applications so the card issuers won't decline you for the other card inquiries. So as I mentioned, in the business world, if you have 2 inquiries or more in the last 6 months, you're pretty much done. You're maybe going to get a card, you're maybe going to get a second card, okay, but that's the most you'll ever get. With this program, you're usually going to get 5 different high limit cards because what happens is they know who will give you the most money, they know who will give you the most money even with no inquiries, 1 inquiry, whatever it may be, and they time their applications in a way where they're going in and getting you all this credit at once so the inquiries won't hurt your chances of getting it, okay? It's a whole system to this. It's a delicate dance. Now, approvals usually range from that says 20,000 to 50,000. But we see these all the time. We see people with 5,000, 10,000 and up. It's not uncommon to see them go even higher. As a matter of fact, we've seen clients with 100,000 of this kind of money, and you can get 150,000 with this kind of money. But typically we see about 20 to 50,000 are the approval limits. Now, the result of this service is that, as I said, you can get 5 cards that mimic your highest credit limit accounts. I got to dive into this because this is something that always baffles me when I talk to business owners. So when you are looking for a credit card, they're going to look at your personal credit. Now, for this program, okay, there's others that your personal credit won't matter. We're going to dive into those. They're going to look at your personal credit. They're going to say, what's the highest limit somebody's ever given you in your life on a revolving account? Maybe it's $2,000, maybe it's $5,000, maybe it's $50,000, maybe it's $10,000. When you apply for a business card, you're typically going to get approved for right about that amount of money. Okay, sometimes people like think it's going to be well more than that. They'll say, well, I have good credit and I want $50,000. Well, what's the highest limit account you have? $2,000. It ain't going to happen. Nobody's going to give you a $50,000 card when the highest limit you've ever had is $2,000. It makes no sense. So what happens in the business world is they're typically going to approve you for round about the same limit of what your highest credit limit account is now. So if you have a credit card with Lowe's or Visa for $5,000 on your personal credit report, and you go to get a business credit card, you're typically going to get about a $5,000 or $6,000 credit card. Typically is the way it works. Okay, if you had a $50,000 credit card limit, they're typically going to give you about $50,000. Okay, and I've been down this road before, especially before the mortgage crash. It was predominant that if you had good credit, you had really high limits. I mean, I had $30,000, $50,000 limit cards. I had declined an offer once for $30,000, and they asked me why. And I said, because I already have one for 30. I wanted one for more. They gave me 50. It was a whole different world back then. But now you don't see that. Now, especially, you're going to get approved for roundabout whatever the highest limit account that you actually have. But with this program, they get you 5 of those. So you can usually get 5 times the amount of your highest credit limit account, and that's 5 times the amount that you're usually going to get on your own. Now, multiple cards, because they're giving you not 1 credit line, but 5 cards, what happens is you're creating competition. And this means that about 6 months in, you can call one of the card companies and go, I'm not using you guys much because this guy gave me credit and he gave me more credit and I'm using him. And the bank goes, oh, really? Well, we'll raise your limit by $4,000. Guys, this really happens. I mean, again, this lender, this is exactly their whole process of going through and getting people approved and then getting you approved for even higher limits as time goes by, because they basically create competition between the card companies. And again, I just gave you an example from my personal life where this actually was really applicable. And because of this competition, you have an easier shot in 6 months of getting your limits raised and keep getting them higher and higher and higher. And again, approvals go all the way to 150 grand per entity, such as a corporation. So if you have a corporation, you can get $150,000 with these type of accounts. How? Well, it depends again on the highest limit accounts you have now and how many other people you have that are maybe willing to sign. So again, you can usually get 3 to 5 times the amount of your highest credit card limit. But here's one of the big kickers. These accounts in this UBF program only report to the business credit reporting agencies. Equifax Commercial, Experian Commercial, Dun & Bradstreet. They don't report on your consumer credit report. This is huge. Something most lenders will not do or advertise. Okay, most times you go to get a business credit card by yourself, you're gonna get it reported on your consumer report, not your business report. Okay, so not only will this give you money, but it helps you build your business credit at the same time. Okay, so let me explain to you 2 reasons this really, 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 really matters to you. The way the FICO score works, 35% of your score is made up of your payment history. Do you pay your bills on time or not? 30%, almost the same, portion of your score goes to utilization. What percentage of your high credit limit you're using. This means that if you have too high of utilization, you damage your score almost as much as if you paid your payment late every month. It's just math. 35% of your FICO's payment history, 30% utilization. You overutilize your account, your scores drop just like you paid a late payment because it's 30% of your total score. And here's the kicker. If you're over 30% of the limit, that's when you start damaging your credit. So that's not very much at all. If you have a $1,000 limit credit card and you owe more than 300 bucks on that, you're hurting your scores. So this is why you wouldn't want to have these accounts report to the consumer agencies, because if so, then the problem is as you use the credit cards, as you inevitably will because you're building a business, you're going to plummet your personal scores, and then your chances of getting real loans and real high-end credit lines that we're going to talk about here go down the toilet. So it's very big because with this UBF program, they report to the business reporting agencies, not the consumer. Here's the other kicker. The other kicker is that once these accounts report to the business credit reporting agencies, then within 3 to 4 months, you have a credit score established. Actually, much faster than that. In about 90 days or less, you're going to have a credit score, credit profile established. Now you've established your business credit along with these $10, $20, $30, $50,000 credit cards in multiples. So what happens is in 3 to 4 months down the road, you use your established business credit to then get more business credit cards. So it's absolutely brilliant because with UBF, you get 5 times the amount of money that you'd ever get on your own. Okay, then beyond that, you're having no impact or reporting on the consumer agencies, meaning nobody that looks at your consumer credit even knows you have this 100 G's in other credit sitting there. It's only on the business reports. Then your business reports, as long as you're paying your bill on time, are established with $10, $20, $30,000 multiple cash credit cards. You have an instant good score as long as, again, you pay your bill on time. Then you could use both profiles to get more money. It's absolutely brilliant, and this is why one of the biggest programs that we see most popular, because it makes so much sense. Okay, and the lender can also give you these low intro rates, the 0% for 6 to 18 months. We now see these go for 2 years. You're not going to walk into your bank and usually get that, but again, this UBF lenders know the sources that will give you those kind of APRs. Usually, 5 to 21% APR after that, 20, 25% APR for cash advances. You already saw per bank rate, the average on these I think is 11 to 13%. And they'll also get you the best cards for points, meaning you get the most rewards. So if you're going to get a credit card, don't even think about applying. It's just not worth your time. You need to find one of these UBF lenders because they get you 5 times as much money. They get you the 0% rate. They get you all the points and benefits. And then they're also getting you accounts that build your business credit and don't report to consumer credit, not to mention that they help you 6 months down the road negotiate and get higher limits. So a ton of benefits with this UBF program. Okay, but just like with anything else, there are huge benefits in working with a source who specializes in the area. The results will be much better than if you try to go at it actually alone. Okay, now to qualify for UBF, you've got to have good credit because it's all that's being looked at. Like, this is unsecured money. There's no collateral involved. So they really want to see 700 type credit score profile to be able to qualify. The same as normal business credit cards. Okay, you shouldn't have any derogatory items reported on the credit. You must also have open revolving credit on your consumer reports. Now that makes sense because they're going to mimic whatever your highest limit account is. So if you have no credit now that's revolving, then you're not going to get approved. And you need to have less than 2 inquiries in the last 6 months, which is another thing that's important that we had already talked about. Now, all lenders in this space usually charge 10 to 15% success-based base fee. So don't expect to not get charged a fee. You're going to get charged a fee. Like I said, they're a lender. They get paid when they perform their service. In this case, which is get you the 5 cards. You don't usually have to pay until you actually get approved. Some sources out there will charge you an app fee. I would never go with a source that would charge an app fee. You only pay the fee of what you actually secure with most of these lenders. Remember, you're getting a ton of extra benefits that you're paying that fee for. 3 to 5 times the amount of money than you'll get on your own, the business reporting, all those other things we talked about. So it's well worth it in my experience to go this route. Now, you can also get approved using a guarantor. And I don't know if I have this on a slide, but I'll give you an example here. We had a guy that didn't want to pay the lender's fee. So we said, you know what, we're going to help you go to your bank and get the most money you can get there. He had 800 scores. We helped him with all aspects of going in his bank to get approved. And he ended up getting approved for a card for $12,500 from his bank. UBF lender had him approved for 75 grand. So that's the difference of what you're paying a fee for versus not. You can go in your bank and get a fifth of the money you get on your own. But when the UBF lender's there, yeah, they charge a fee because they get you more. But again, in his case, perfect scenario, 800 scores, he's only got 12.5 on his own, even with our help of getting his app and everything put together right. And he could have got 75,000 with UBF. So again, that's really in the end what you're paying the lender in the space for. Now you can get approved with more money if you have a guarantor or another signer. You can even use multiple signers. So if you think, well, man, I've got credit problems, like I can't, this doesn't work for me. Whoa, don't write this off just yet. You could use a guarantor for this, which in our experience, 20-25% of clients do. So in that case, you might have a family member, a friend, an investor, somebody wanting to invest in you and your business, and you could use their credit to be able to secure the money as a guarantor. There's a lot of circumstances where you might have somebody that might work as a guarantor of, again, somebody that maybe wants to be part of your organization. Okay, so consumer reporting. Now there's another kind of program. So I just walked through UBF and I spent a bunch of time on it because, again, in my experience, it's one of the most popularly advertised and actually utilized programs with credit lines and credit cards. So next I'm going to talk about something that's a little bit more lenient. Unsecured business financing, UBF, but with consumer reporting, with no business credit reporting. So there's also this type that's basically the same program, but these cards only report to the consumer reporting agencies. You don't get that extra benefit of building business credit with these kind of accounts. Okay, so these are consumer credit cards really versus business credit cards. They provide similar benefits, 0% APR. You can get 5 times the amount of your highest credit limit account now, but they're a lot easier to qualify for. So even though the UBF program is really stringent, you've got to have good credit to get approved, then with this program that reports with the consumer reporting agency, you don't need to have as good a credit. You can get approved with a 680 score, maybe even sometimes lower. You can get approved with 5 inquiries versus 2, so almost double, like 2.5 times the amount of inquiries. You can have a BK on your credit. You can have older derogatory items. This program is just a lot more forgiving. This is much easier to get approved for than UBF business credit cards. So if you had a choice with really good credit, you're going to go with UBF because all those benefits. You'd be crazy not to. But if you got some dings and you still need to apply and get approved, well, then this is much better. This even has much better utilization. Like you can get approved with this with like 60% utilization. The regular UBF, you need 30%. So if you kind of qualify, but maybe just miss the mark with UBF, this is a great secondary program, or it's another way to get even more money. So maybe you go with UBF and then you do this behind it and get even more money. Okay, so with all previous cards mentioned, you need to have good consumer credit to get approved. Oh, let me actually, that's perfect. So that's all I want to say about that. There's not much more to say about these consumer reporting accounts. They've got all the same benefits, all the same features as the regular UBF. It's just more lenient to get approved. And the trade-off is that you don't get the benefit of building business credit. Okay, but it's a good secondary option if you don't have the credit for the primary UBF. We're going to talk about a third one now. Unsecured credit cards using business credit. So with all the ones we've talked about so far, you have to have good credit, consumer credit to get approved. But what if your personal credit isn't good? You don't have a guarantor. What if your personal credit sucks? It's horrible. It's bad. You know there's no way you're even going to go through credit repair and get it fixed. Well, that's when building business credit just makes a ton of sense as another option. Because even if you have good personal credit, even if you do, well, building business credit still makes sense because you get even more money. But most importantly, you don't have a personal guarantee. So that's one of the benefits of building business credit is with business credit, you don't personally guarantee the money. So what we talked about before and the other options, you are personally guaranteeing your money. Why? Because you're not providing collateral. It's called unsecured. You're not securing the money with any kind of collateral, so you're going to have to supply a personal guarantor. But with these cards, with business credit, with real business credit, you're not supplying a personal guarantee. We teach our clients not even to provide their social when they're applying for business credit cards. So without your social security number, they can't even pull your credit report, which is why you can get approved for these regardless of personal credit. Now, business credit, if you're not familiar, we're talking about credit that's in a business name. This is credit that's linked to your EIN, not your social security number. Okay, I put now instead of not, but hopefully you'll disregard that. So when done properly, business credit can be obtained with no personal credit check, no personal guarantee, something all other cards I've mentioned cannot deliver. Okay, here's how you have to look at business credit if you're not familiar. You have a social security number. You have built a credit report per your social security number. For however old you were, you got credit, you've continued to build the credit, good or bad, and now when somebody pulls your credit linked to your social, they see a credit report. Most people don't know that your EIN's the same way. You could build a credit profile and score for your EIN the same as you could for your social, and neither one of them are linked to each other. Okay, so your business credit's completely separate from your personal credit, especially if you do it without supplying your social and this personal guarantee. Now, you can usually get 3 types of business credit cards. Vendor credit, which offers net 20, net 30 terms used to start a business credit profile. Now, you'll hear this referred to as tier 1 credit and blah, blah, blah. It's basically vendor credit. These are vendors like Uline or Quill that will say, okay, Mr. Customer, if you want to do business in our store and you have a business, then we'll give you a small line of credit for $500 that you could use at our store. And by the way, we report this credit line to the business credit reporting agencies. But here's the catch, Mr. Customer. We're not going to make this a revolving line of credit or credit card. If you borrow $500 this month, you're going to have to pay the $500 back within 30 days, 20 days, whatever the net term is. So that's what vendor accounts are. Now, vendor accounts, why would you want a vendor account versus a revolving account? Well, you wouldn't, but you're going to get a vendor account because this is a necessity to build business credit. These vendor accounts are perfect because once you get some of them, then you establish a business credit profile, business credit score that then allows you to move on to the next kind of credit, which is store credit. Now, these are credit cards with high limits. Okay, $10,000 at Dell, $5,000 at Apple, $3,000 at Amazon.com, Walmart, Sam's Club, Costco, BP, Chevron. Almost every major retailer offers business credit cards. And if you get vendor accounts and you build a credit profile and score, you can then go in and start getting like high limit store credit cards without your social being looked at, without your personal credit being a factor. So super cool. You can't only use the card in the store you're getting approved for, but come on, you're building a business. You need credit at Staples and Lowe's and Walmart and Lowe's and Home Depot. And if you're a truck driver, BP and Chevron. So you need this kind of credit anyways. And it helps you further establish your business credit profile and score. Then you move on to cash credit, which is what you want. Visa cards, MasterCards, Amex cards you can use anywhere. Again, high limits. How high? Typically within 4 to 6 months of starting a business credit profile, we see our average client get $5,000 to $10,000 limit cash credit cards regardless of their personal credit. Guys, if you have really bad credit issues, you're not going to get $10,000 credit limit cards any faster than that unless you're usually using a guarantor. And one other option, which I'll show you a little bit later. Okay, these can be obtained with no credit check or guarantee because they're linked to your EIN. Again, in applying, you're not even going to supply your social on the actual application. And limits are often $5,000 to $10,000 to start. You can exceed $50,000. Somebody asked me the other day on our YouTube channel, they said, can I get $70,000 of money within the first 12 months? I said, yeah, piece of cake. You could get 70 grand in the first 6 months. It would be a combination of vendor, store, and cash credit. In 6 to 12 months, you could probably get a total of 50 to 100,000 in cash credit, regardless of personal credit or guarantee. This is why a lot of people build business credit, because for one, it doesn't matter what your personal credit is. It can be horrible. And, I'm speaking at an event in October, and I was on like this ramp up where we all speakers talk about what we're going to talk about there, like a brief description. And there was this lady there that said one of the best things I've ever said. She goes, look, my FICO's banged up because I'm an entrepreneur. And as entrepreneurs, we're risk takers. And usually our personal credit reflects the risks we take. And I'm like, hallelujah. Yes, you are spot on correct. It's just, it's the way we all work. We're risk takers. We're entrepreneurs. So it's common for us to get into business with credit issues. So this is where business credit is a great solution. It's completely forgiving. No matter what you've done on the personal side, you could still get this kind of money. Fantastic solution. So let's talk about an unsecured bank line of credit. Now, some alternative lenders are now offering lines of credit. That's what an LLC is. Lines of credit for $50,000 to $150,000. This has become one of our other most popular programs. This is a minimal doc program. Now, it's not stated. The ones I've told you so far are stated income. You don't have to supply tax returns. You don't have to supply bank statements to get approved. You put your income on the app, and they go off the income you put on the app. Okay, but with this one, it's minimal doc. They're going to usually require tax returns, but they're not going to require the P&L and the banks. They're not going to require everything else that's usually required. Usually when you apply for a bank loan, you've got to have personal business bank statements, personal business tax returns, P&L, projected P&L, balance sheet, and on and on and on. With this, you don't need all that stuff, but they are going to look at your tax returns. Now, if you're looking for over 100 grand, yeah, they're going to ask you for the P&L and balance sheet, but that's it. And these take much less time to close than conventional bank lines of credit. So if you go into Bank of America or Chase and try to get a loan there, forget about it. I mean, could easily be 3 to 6 month process. With these, 30 to 45 days, ba-boom, you close and fund. That's pretty super awesome because it's 50 to 150 grand line of credit. These are not credit cards. This is a true line of credit. Here's one account for 150 grand that you can get cash advances on without paying a high rate. These are true lines of credit. To get a line of credit in 30 to 45 days like Doc is a rare find. Rates are low too. I mean, about 7 to 10% on average, and your approval amount is usually about 10% of your annual sales per the tax returns. And this is important. Some credit lines go off your profits, some go off your sales. This one goes off of your actual sales. Now you'll need an Experian score of 700 or higher to qualify. So this is an Experian-based program. They're going to look at your Experian scores heavier than everything else, which can actually be kind of good because not as many accounts report to Experian as they do Equifax and TransUnion. So you might have a better chance of having a better Experian than you do TransUnion or Equifax anyways. Okay, so some conventional banks and private lenders also offer high limit credit lines. So I'm moving on to another program. Okay, so a lot of conventional banks, your Bank of America, your Chase, they offer very high limit credit lines, 50 to 250,000. Now, if you have ever looked into credit lines, this is probably what you found. This is probably what you found because this is the most common type of bank credit line that's out there. Now, these are the types of accounts that I see most business owners truly want, right? I want a high limit actual credit line. Okay, but approvals require good personal credit and you've got to have tax returns for at least 2 to 3 years. They want to see your profits increasing from year to year. So there's two things they're looking at on your tax returns. Well, three, I guess. Do you have good profits? Are your profits increasing from year to year? And then do you have good revenue? Is your revenue increasing from year to year? And then also, how is your profits? Do you have increasing profits from year to year? Now, the net revenue on your tax returns is equivalent to the amount you're going to get approved for. So I just told you about the bank unsecured line of credit. With that one, they're going to do about 10% of your gross revenue. Okay, well, sales. That's what you actually made in money. But your actual profit, okay, is what they refer to as your net revenue. Your actual profit is what they'll approve you for on this. So if you have tax returns that show, hey man, I did $2 million and I made $250,000 in true profit, well then you're probably going to get approved for up to $250,000. They're looking at the profit on your tax returns. Now some sources will require collateral, but most don't, and you'll need to supply a personal guarantor for a guarantee for approval. You're going to have to personally guarantee this because it's unsecured. There's no collateral. Okay, if you want to know about guarantees, that's what it comes down to. It comes down to this: do you have collateral or don't you? If you don't have collateral, you're usually going to personal guarantee unless you're using your business credit. If your business credit's strong enough to get you money, you often don't need to personally guarantee. But if you're just going off your consumer credit, you're always going to give a PG unless you're providing collateral. Okay, this is a full documentation program. Tax returns, P&Ls, balance sheet, bank statements for both personal and business to get approved. Okay. You also need really good personal credit, 720 scores or higher with no drugs. We've seen clients with 780 scores denied because of one derogatory item. Of all the programs I'm going to show you today, this is the hardest to qualify for program in existence. Underwriting and closing take about 60 to 120 days, sometimes more, sometimes 4 to 6 months. And some are guaranteed by SBA. Almost all are guaranteed by SBA is what I say. So why is that important? Because you're qualifying two places. You got to qualify for your bank per their standards. You got to qualify for SBA per their standards. That's why this is the hardest to get approved for. It's just like an SBA loan. How many people have you ever met in your life who ever got an SBA loan? Maybe you know somebody, maybe you don't, but almost guaranteed you don't know more than what you can count on one hand or even a few fingers because they're very tough to get approved for. So's this. It's the equivalent of an SBA loan. Really, really tough to get, which is why if you're even close, you should go with that unsecured bank line of credit that I just showed you for up to 150 grand. So unsecured cash advances, pay attention if you have credit issues. I'm about to introduce to you something that nobody really knows about out there in the lending space, or nobody's talking about yet because it's so new, and it's about the only way you can get a real, true line of credit with credit issues. So cash advances, are also known as merchant advances, revenue lending, and cash flow based financing, are a great way to get fast and easy money. The easiest and fastest way you're ever going to get money. I mean, you can get cash advances within 72 hours. We had a guy call us Monday, and he needed money to pay his payroll on Wednesday, and we got him his money in 48 hours. So this is the fastest way you're ever going to get money. And by the way, all we needed from him to get it approved was 3 months bank statements, and we got the guy approved. So fast, easy money. You can get approved even if you've been in business for 1 year. If you've been in business for 1 year or more, even if your FICO is as low as 500. So even if you have a really low credit score, you could still typically get it approved for the merchant cash advances. Okay, and usually they want you to be in business a year. If you have really good credit as a compensating factor, then they might approve you if you've been in business only 6 months. But if you've been in business less than a year, you'd have to have good credit to get approved. Otherwise, if you've been in business 1 year or more, then your score is as low as 500, you could typically get approved. It's about the only type of unsecured financing that doesn't require good personal or business credit to actually get approved, okay, is with cash advances. Now, cash advances require revenue. You have to have an existing business. This won't work for you if you're a startup. So even if you're just starting your business now, keep these in mind, because in a year, this might be applicable to you. But you really need to have revenues of $10,000 a month or higher to even have any chance of getting approved for an unsecured cash advance. Why am I talking about unsecured cash advances? Well, I'll tell you, because right now, some lenders are now offering credit lines instead of or in addition to the actual cash advance. Actually, the lender will usually approve you for both. So what happens, and we're starting to have our clients, actually a lot of our clients are getting approved for these, they'll come in, they'll get a $50,000 cash advance. The lender goes, here's $30,000 in the advance. Do you want a credit line? And they say yes. And they say, okay, here's a $20,000 credit line to go with that. So it's usually they give you a loan and they'll give you a credit line also. When you apply, upon approval, you'll be offered the credit line if you qualify. Again, these are very new. Not a lot of these cash advance lenders are offering this yet. As a matter of fact, we are part of a beta test with one of the biggest lenders out there that's just seeing how it goes. And the same as the bank line of credit, right? We're blessed because we do so much funding that we're often invited in to participate in warehouse lines and hedge fund money and these kind of beta tests. So we know about them first because, we've got a lot of clients that they can use to actually beta test to see how this works. But this is out there. And if it's not out there yet, within a year or two, you're going to start seeing this out there more and more and more often. So when you apply, that's when they determine if you're actually able to get approved. Okay, so revenue lending, credit line, I think these are a little harder to qualify for than just the cash advances. Okay, you might need better credit or a compensating factor. So again, the cash advance I said you can get approved for a year in business bad credit. Well, with these, they might be a little bit harder to qualify for than that. But again, if you have a compensating factor that makes sense, you'll typically be able to get approved. Funds must be used for the betterment of the business, not for you personally. And looking for 20% profit margins for approval is what a lot of them are looking for right now. So they might even ask for your tax returns. Unlike regular advances, regular cash advances, they're not going to ask for your tax returns on these, but with these, it makes a lot of sense because you typically can get approved, and they might ask you for tax returns, but again, it's well worth it because to get a merchant advance credit line, to get a credit line in 3 days, to get a credit line, even if you have credit issues, those are really, really, really big things and almost impossible to come by. As a matter of fact, in all my times in the lending space, I've been in financial services for about 16 years since I actually got out of the military. I can tell you that I've never seen a true credit line for somebody with bad credit except for this. This is the first time in history I've ever seen such a thing. So I'm really, really excited that it's out there because, again, so many entrepreneurs have credit issues. So I hope you got a lot out of this today. I introduced you to everything that's a legitimate credit line and a legitimate credit card option that's out there. We talked about how to get money with good credit, how to get money as a startup. We talked about how to get money with bad credit. We talked about the difference between credit cards and credit lines so you could differentiate between them. So hopefully now you have the knowledge you need to go out and to be able to find what you're looking for. In my experience, that's the problem with the lending space. That's why my company exists, okay? Because we wanted to create a solution where you could get business credit financing, everything in one place. Because in our mind, that's the problem with the space. If you don't know what to look for, you're not going to typically find it. So hopefully I've accomplished my goal with this show today, which is to teach you exactly what to look for, what's out there, what you can qualify for. So now you know what to look for. And now that you know what to look for, then you're able to have much better success at securing credit cards and credit lines for your business. Again, if we can ever help you in any way, let us know. 877-600-2487 is our number. Our email is info@creditsuite.com. If you're interested to know if you qualify for a loan, we deal with all kinds of asset-based, collateral-based, and cash flow-based programs and business credit. So make sure you check us out, creditsuiteloans.com. And on that page, you can actually go through a quick free qualification. It'll tell you right away what you qualify for. There's even a video and detailed explanation of all the programs, so you'll know rates, terms, all those kind of things. So if that helps you, might as well check it out. So again, I know how important your time is as entrepreneurs. I got another webinar coming up here in a matter of minutes, so I don't have time to sit around and type questions. But if you have any questions, feel free to check us out, info@creditsuite.com. Also, make sure you check us out on YouTube. You can simply go to YouTube, type in Credit Suite, and if you do, then you will find our YouTube channel where we have many, many multitudes of shows that will teach you how to get approved for financing, how to build your business credit, how to get business loans, everything you'll need to be successful getting money for your business. So again, this is Ty Crandall. Thank you very much for taking the time to attend this show. I hope everybody has a great day, and I hope everybody's having great success in their business. Thanks, everybody.